Hello everyone. The US bond yield has suddenly surged. 30-year bond, 20-year bond, 10-year bond, all these yield long dated bonds, their yield has spiked rapidly in last 1 or 2 weeks. We're going to be discussing why suddenly this the bond yield has spiked and the prices of those bonds it has tanked. And at the same time, we'll see what US government is trying to control to bring this yield down and how successful they have been. We are also going to talk about the US national debt that has crossed $40 trillion, and servicing this debt has become very expensive. If you like this video, I'd appreciate if you hit a like button and subscribe this channel. So one of the main reasons is that why this US long treasury bond yield is spiking. If you look at this table that I got from UStreasury.gov, that shows the major foreign countries that are the holders of major US Treasury amount. Those three countries, basically Japan, United Kingdom, and China, they hold a lot of US Treasuries. So, for example, Japan takes about 1.1 trillion dollars of US Treasury, and United Kingdom holds about 939, and China, mainland China, they hold about $633 billion worth of US Treasuries. But if you notice, during the last 2 months, in the May to June, there are like all these countries holding major US treasuries, they have been selling those bonds. They are offloading them, they're selling them. So for example, in Japan, the amount of treasury holding came down from 1.14 trillion to 1.1. So they sold about many 20 plus billion dollar worth of US treasuries. Similarly, United Kingdom sold a few $1 billion, and mainland China sold off about 24 or 25 $6 billion. In this table you can see 653 billion to 633 in June from May. So all these countries, since they have been selling bonds, there is not enough demand left for US treasuries. This could be because of the war and because of the inflation and other things. They basically they are not holding these US treasuries anymore, and this is the prices are the bond prices are dropping, and as a result of which the yields are spiking. That is one of the reasons. And the next reason is, another reason is basically the other countries, many of the other countries, their yields are also spiking up. In this spreadsheet, as you can see in this slide, that the Japanese 30-year treasury bond on the right side, it spiked to all-time high from last 2028. So about 20 years, it's around 4%. Their 30-year yield. Similarly, in United Kingdom, the yield is over 5.5% on the right side. So in last as many years, very rapidly spiking the United Kingdom their bond yield. And also in Germany, this bond last since 2020, it has been basically steadily going up, and it's at the highest level. So all these Western industrial economies, their yields are spiking up, and since all these countries their yields are higher, so if I'm an investor in United States, I would also expect that I get a better yield, and then there is a basically correlation kind of effect for all the US bond yield also, as this yields for other countries, they have steadily going up. So that is one of the other factor why the US the yields are spiking. Other point is many of these hyperscalers, meaning the technology companies, the large companies, they have gone to the public market and the corporate bond markets and trying to raise money. So they have gone issuing debts, especially to build AI projects. Say for example, data centers, or buying GPUs or memories, or the overall cooling, or energy system to build their data centers. In this slide, you could see Alphabet, the Google, they did a debt issuance of about 50 to 60 billion and projecting to do at 40 to 100 billion next year. Amazon did $65 billion range and going to go a lot higher to 100 billion next year. Meta from 50 billion to 85 billion. Microsoft 45 billion to 75 billion, and even Oracle from 45 billion to 60 billion. So between this year from 250 billion to 400 the billions. So this much of corporate issuance of bonds, actually they're competing with the government bond issuance program. So there are a lot more choices amongst the investor, and hence the prices for the US government bonds, they are basically falling because there are other attractive yields that has been offered by these hyperscalers, and hence since the prices are dropped, the yields are shooting up. And in this slide, suddenly the US Treasury, the debt also crossed $40 trillion. And to finance this debt, US government actually has to issue a lot of new money. They have to print money, and then that is inflationary, and that is why this yield has started spiking up. So currently this debt clock is showing that we have crossed this 40 trillion, meaning see how many numbers after this number 40. There are 612 digits after 40. It's a huge number, and it's our share. On an average, we own $120,000 if you have to pay off this debt. And how this much of debt basically we collected, if you see from since 2021 to 2026, President Bush actually incurred $4.9 trillion of debt. Obama did 9.3 trillion. Donald Trump did 7.8 trillion in his previous term. And Joe Biden, during the COVID time, his debt increased by 4.8 trillion, and Trump's current term, he already has actually bloated the debt by another 3.83. So all in all, if you add together, actually President Trump has bloated the debt by out of all other presidents to reach to this 40 trillion. And to pay the interest payments on this debt, it cost about over $1 trillion, which is higher than US government's defense department's budget. So, and this has been not the debt is not coming down, and this is becoming very inflationary. And there are the bond vigilantes, they are saying that US the government will have to issue more debts, and they're pushing this yield higher. So what is US government is trying to do? The Treasury Secretary few days last week actually tried to buy back some of those old bonds, that's off the run bonds. He doubled it from $2 billion to $4 billion. So the market actually reacted positively that day, came down the bond yield dropped by about 7 or 8 basis points. But the next day it started spiking up again, and day after it's even higher. So it again reached back higher than, so whatever he did, it never really worked. And then what really means that this is like a runaway train. These yields are going up, and at this time the government, whatever the medicine they have put to control this, it is not working. So today actually Secretary Bessent said that he actually tapped $1 trillion new money from this US Treasury General account, TZA account, to buybacks bonds, meaning he'll have the option to spend $1 trillion to buy these off the run long bonds. And how is going to be financing that? So what I've been hearing that actually he'll be selling the short term bonds like 2 year notes, and then the proceeds of those sell, he's going to be using to buy these long end bonds. So currently this yield curve is very upward sloping, meaning the yield is very high at the long end and it is low at the short end. So as a result of that, potentially it could actually get twisted, meaning the short end bond is going to go up and long end bond might come down. So it is what is called the yield twisting, this particular exercise, but it remains to be seen whether it really is working or not going to work. And how does this long bond yield rises? Basically, the mortgage is going to be it's back to 10-year treasury. Student and auto loans is going to be high. The prices are going to be pushed up, the interest rates. The credit card also, short-term debt tracks and Federal Reserve's prime rates closely track US treasuries, meaning these prime rates actually it's going to impact credit card rates. Other than that, large purchases buying household goods, any other purchases air conditioners, vehicles, or real estate, this is going to be more expensive. And business is going to be slowing down because the borrowing, the cost for these companies, their expansion program might get impacted because of this inflation. That there may be job market stability can be impacted. The savings returns, like if you have put money in your CDs or high yield savings, you could potentially actually get higher income from this savings account. So this is what I have to say for regarding this spike, sudden rise of US long bonds, and I'll keep you posted. If you like this video, I would appreciate if you'd subscribe my channel and hit a like button, and thank you and have a nice day.